What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBBY, Bed Bath & Beyond. This finishes at $23.08 today. That is up 11.77%.
Winning.
But in the aftermarket here, this is pulling back very significantly down to $18.50.
And it's gone.
So we've been covering this stock for over 2 weeks now. This is the hot meme stock right now. The retail favorite on social media, StockTwits and Reddit. So this stock and a bunch of other meme and low float stocks have been squeezing. And while most of those stocks have since pulled back, this stock just keeps on ripping to the upside. This went all the way from the low of 440 up to the high of 30 today, which would be over a 580% upside. So massive upside so far. I'm very happy for the apes, but this is getting extremely dangerous, and it does appear like the squeeze is starting to wind down and come to an end. This was number 1 on StockTwits today, had over 18,000 mentions, so once again, we're going to analyze it. So there was no company-specific news to justify the price action to the upside today. Again, this is just really social media driven right now. Apes in here, still strong, still trying to squeeze the stock. However, towards the end of the day, right before closing, we did have some negative PR come out. So let's check that out real quick. So Ryan Cohen filed a Form 144. It says that he's going to sell 9.45 million shares of Bed Bath & Beyond through JP Morgan, which is his entire stake. So this is still new information. Nobody knows if he actually sold or is going to sell, but Ryan Cohen will be selling if he hasn't already, which I did say yesterday, and I did get a lot of hate for that. But here we are today. So let's jump right in. Let's go ahead and analyze here. So during a short squeeze, the fundamentals and the technicals don't matter as much as normal, but they're still very helpful. So take this with a grain of salt, guys. And this is going to be more or less the same from yesterday, just with the updated price action. So in the previous shows, we did have this bull flag here. That was a bullish indicator. That was suggesting that the stock may break out to the upside. It did in fact break out, and a new bull flag was formed. So that was another bullish indicator. Again, that was suggesting that the stock may break out to the upside. It did in fact break out to the upside again. And here today, we have a new, even bigger bull flag forming. No confirmation just yet, but here's the flag pull. So all we would need is some pullback to form the flag, and that would be a bullish indicator that is suggesting that the stock may be due for another breakout. This is a cup and handle in the making. Bottom of the cup being the low of 440. There can be multiple possible tops. It can be $30, which it hit today. And if the top is $30, the cup and handle would currently be a bearish indicator, because that means this is due for some significant pullback to form the handle. But longer term, this is part of an even bigger cup and handle where the top can be $31.70, $39.30, $40, $44.55, or even the high of $53.90. Although I do believe the most realistic tops would be $30 or $31.70. So the cup and handle can be bullish or bearish depending on where the top is. But yeah, $30 would be bearish, and anything above $30 would be bullish. And then we do have a triple gap up. It's pretty difficult to see, but the first gap up was back at $13.30, so that's a bearish indicator that is telling us that the stock should come back down to $13.30 to fill that gap. Second gap up was back at $8.30, so another bearish indicator that is telling us that the stock should come back down to $8.30 to fill that gap. And the final gap up was back at $6.50. So another bearish indicator that is telling us that the stock should come back down to $6.50 to fill that gap. And all of those gaps should fill in the short term. In the aftermarket here, this is pulling back down to $19. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. Here we have an ascending channel. Right now the upper channel is at 24.5 and the lower channel is at 17. So if this breaks 24.5 to the upside, that would be bullish. And if this breaks 17 to the downside, that would be bearish. So this did in fact break 24.50 today. And this was bullish, but it has since pulled back. So the ascending channel is currently a neutral indicator, and this may very well be a bearish indicator very soon. Again, if this breaks $17 to the downside. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 23.10, which it finished at today. So if this goes to the upside, next levels of resistance would be 23.45, 23.70, 24, 24.20, 24.50, 25.30, 25.80, 26.40, 26.70, 27.25, 27.75, 28.10, 28.55, 28.85, 29.20, 29.55, and then $30. There is resistance above $30, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 22.80, 22.45, 22.05, 21.60, 21.25, 20.90, 2055, 2015, 1965, 1930, 1890, 1855, 1835, 1805, 1780, 1750, 1710, 1665, 1620, 1565, 1530, 1490, 1450, 1420, 1380, 1340, 1295, 1260, $12, 1170, 1125, 1090, 1055, 1015, and then 965. There is support below 965, but we're not going to discuss that right now. So right now with the current price, 2310, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks 715 to the downside, the channels start to narrow, so expect a significant decrease in price action if/when this breaks 715 to the downside. RSI is currently at 89, so this is very deep in overbought and overvalued territory. So be careful, guys. Although it'll definitely open lower because this is pulling back pretty hard here in the aftermarket. And this did 256 million in volume today, which is the second biggest volume day of the year after yesterday. So very significant volume, way above the average of 11 million. So this pump/squeeze today was confirmed by the volume. Although it does appear like momentum is cooling off, so the squeeze might be coming to an end here. Okay, guys, just my opinion, not financial advice. It's been an epic short squeeze so far, over 580% from the low to the high. So like I said, I'm very happy for the apes, but this is starting to look very bearish in the short term. I've been saying in the previous shows that I don't think that this would go higher than 30, and it does appear like 30 was some very critical resistance and very well could be the top of the squeeze here. As with every short squeeze, it's going to have to come crashing down, just a matter of when, not if, and it does appear like the pullback is starting. So be very careful, guys. It's pretty much a game of hot potato at this point. Someone's going to get caught holding the bag. Make sure it's not you. So make sure you set your sell orders, your stop losses. Don't be too greedy, guys. Secure the gains. There's nothing wrong with hitting the sell button. Diamond hands is not the way. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. Again, this is starting to look pretty bearish at this point. We have some pretty strong bearish indicators in the cup and handle, triple gap up, aftermarket action, and high RSI. And the ascending channel could also soon be a bearish indicator. So way more bearish indicators than bullish indicators right now. And the momentum is cooling off, losing volume here. This already moons quite a bit to the upside. I think you missed a chance, and going long here at 2310 would pretty much be FOMO at this point. It's pretty hard to predict how high this will potentially squeeze because there are no gap downs to go off of. But again, I think realistic top would be $30, and from the current price of 2310, that would be about a 30% upside potential. So still a pretty decent amount of upside potential here in the short term. And again, this should eventually come back down to 650 to fill the gap there. And from the current price of 2310, that would be over a 70% downside potential. So massive downside potential here in the short term. So I would say going long at the current price, 2310 would be a high risk, high reward play. Not really worth it in my opinion. So if you want to go long, please do that at your own risk. And it would definitely have to be for a quick scalp. Get in, get your money, get out. But honestly, if you're a little bit patient here, again, this should eventually come back down to 650 to fill the gap. And I think that would be an excellent entry. A way better entry than the current price of 2310. And at 650, there's massive upside potential in the longer term and really shouldn't go too much further to the downside. That's near the all-time low. So I would say going long at 650 would be a low risk, very high reward play. Definitely worth a shot in my opinion. You really can't go too wrong there. So I don't like the current entry of 2310, but I can support going long at 650. And if it pulls back, then you can just average down at the supports on the chart. Now, if you want to go short, not financial advice, looks like a pretty good play to me. And I know that's not a popular opinion. Don't hate me, guys, but I'm just reading the chart here. Again, a lot of strong bearish indicators right now. This is losing momentum, volume going down, Ryan Cohen dumping his entire stake. So yes, this appears to be very bearish right now, and this appears like it's due for a significant pullback. So again, in the short term, this has the potential to come back up to 30, which is a 30% upside potential. And again, this should come back down to 650 in the short term to fill the gap there. And that would be over a 70% downside potential. So I would say going short here at the current price, 2310 would also be a high risk, high reward play. A bit risky here, because this is still short squeezing. Ape's not giving up just yet, so anything can happen, although unlikely. So as long as you're able to withstand the upside pressure here, this should eventually come back down to 650 to fill the gap, and that should be some pretty fat tendies on the downside here. So I can support going short at the current price, 2310 and higher, and again, I would cover at 650 where the gap is for a relatively easy 70% downside gain. So congratulations to everyone who made money in the stock today, and sorry to everyone who lost money in the stock today. Consider taking profits if you're up, not financial advice, and good luck to everyone currently in the stock and to everyone looking to take a position. This is BBBY, Bed Bath & Beyond. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.